The most important crypto law in America right now is not being debated. It is not being voted on. As of today, Tuesday the 4th of August, 2026, the Clarity Act is simply sitting there, going nowhere. And the reason has almost nothing to do with crypto itself. The Senate has pushed consideration back until at least next week, with the August recess bearing down fast. What has jammed the machinery is an ethics question about the president. Democratic senators argue that Donald Trump's own digital asset interests create a conflict, because he would personally benefit from the very rules he would sign into law. That single objection has frozen years of work. Last week, Senators Elizabeth Warren and Adam Schiff formally asked the Securities and Exchange Commission to investigate Trump Media, the parent company of Truth Social, over its digital asset plans. The timing was not accidental. Warren has spent months attacking what she calls dangerous deregulatory loopholes in the Clarity Act, tabling amendment after amendment. None of them succeeded on their own. So the strategy shifted. Rather than fight the bill clause by clause, opponents made the bill inseparable from the ethics question. That is a classic legislative tactic. If you cannot win on the policy, change what the vote is about. It has worked, at least for now. Here is why this matters beyond Washington. Market structure legislation decides something deceptively basic: which regulator owns which token. Is a digital asset a security, policed by the SEC, or a commodity, policed by the CFTC? Without an answer, exchanges list cautiously, institutions hold back, and legal risk gets priced into everything. Coinbase has stayed publicly optimistic, arguing the Clarity Act strikes the right balance between certainty and innovation, though industry patience is visibly thinning as negotiations stall. Analysts at Bernstein have warned that a Senate failure carries real downside for digital asset prices. Uncertainty is not neutral. It is a cost, paid daily by ordinary holders. The near-term maths is unforgiving. With the recess approaching and floor time evaporating, a bill that slips past this window loses momentum into the autumn, when election politics start crowding everything out. Two realistic paths remain. Either negotiators bolt on some form of ethics or disclosure provision to buy Democratic votes, which the White House will resist, or supporters wait and try again with a changed Senate arithmetic. Watch three things this week: whether the SEC responds to Warren's referral, whether Republican leadership schedules floor time at all, and whether major exchanges shift from optimism to open criticism. That third signal would be the most telling. Strip away the noise and the lesson is simple. The Clarity Act is not stuck because lawmakers disagree about blockchain. It is stuck because crypto legislation has become entangled with the personal finances of the president who would sign it. For investors, that means regulatory clarity in the United States is now hostage to a political fight with no clean resolution. Do not price in passage. Price in delay. And remember that the longer this drags on, the more the industry's biggest players will look to Europe, the UK, and Asia for the certainty Washington keeps promising and failing to deliver.